TWR Saturday technical video. How I flipped 10K into 38K in 30 days. I'm going to go through the process. So members of TWR, watch me do this live, and I'm going to explain the process behind how I did this. We started on October 7th with the $10,000 deposit into the broker, and this Friday in the broker, we ended up with 38.6K. So you're probably thinking, well, what's the secret? No real secret, guys. I use straight momentum trading, breakthrough trading, and reversal trading. So we have to understand that momentum trading is basically wanting to buy and sell the assets. And in this case, asset is the stocks or the options that we're in. And we're looking for strength of price trending. So we're really looking for the momentum of continuation into the direction we believe that the trade is going in, and that's where we make our bet whether we're going long or short. Now, when we talk about breakout trading, basically we're looking at significant price action that it has reached and attempted to break past important support or resistance line, and usually it's associated with multiple attempts or multiple failed attempts, and then finally it gets its breakthrough, and then that's where we get the dramatic push and the dramatic volatility that gives us the big home run returns. And that's why we like to trade off of patterns, technical analysis on the support and resistance, and out of wedges and flags and stuff like this, so that we can see it before it happens and trade on the direction of pattern, hoping that the breakout happens in our favor. And finally, I used trading off the reversal. So this is when the direction of the price trend has changed and it's going either up to down or down to up. And what the idea is that you have to be able to watch the price action, and you are catching it at, say, a bottom for the bounce back up, and then you're getting into it as low as possible and riding the momentum up so that you can secure profits once the momentum has ceased, and then you can come out of your trade on a green. And it works for both going long and short because you can play it off of bounces from the top down or from the down up. Simple, right? The most important pillars to successful trading are patience, discipline, strategy, and experience. This is truly the difference between professional traders and noob traders. So, momentum trading really comes down to three keys: price action, candlesticks, and pattern recognition. So, going back to our example, we mainly did stocks that were in the S&P, so we're going to go ahead and look at SPX. Now, I have it outlined here in the 30-day period upon which we traded on from the 10th of October until the 4th of November, and you can see that right there. So let's break this chart down a little bit and look for keys to momentum. All right, so let's take the example right here. We notice that we gap down, okay? And the arrow there is showing you the gap down. We notice that, okay, the momentum is strong to the pressure to the downside, right? So we want to try to enter a trade going for continuation of the momentum, right? And so we hope we get into the trade at the top of where the candle starts to form, and we can ride this momentum down. And we notice that we get a 3 classic bar sign to the downside where each candlestick is a full body candlestick, and we're starting to close lower and lower, moving down. Now, I want you to notice that we start to get a nice full thickness candlestick to the downside that we're riding. The very next day, we're getting a decent candlestick to the downside, and then we start to waver a little bit on our price action where the candlestick starts to, not be as strong full thickness, and we start to wick to the top and the bottom. That is our key sign that, it might be time to start looking for our exit and expecting the reversal to happen. And sure enough, look what happened on the next day. Okay, so we start to get an inside bar inside of the previous price action, all right? This should be putting off all sorts of warning signs into people's head, like ding, 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 ding. All right, if I'm not out now, I need to start getting out, and I should be expecting the reversal to the upside. So I need to be prepared to exit the short side of the trade and start going long on the trade. And we can see that the very next day, yes, we took the dump to the downside, which we could have rode that momentum fantastically to the downside, but then we saw the price action from the previous day and we are ready to ride this momentum to the upside so that we could make money going both ways, long and short. This is how we playing off of the momentum, and then it goes right into our strategy of also playing off of the reversal. And this goes into our next section. So reversal trading. Keys to reversal trading are looking for rejection, time frame continuity, and continuation or follow through. So when we're looking for the rejection, note that we broke through previous support right here, right? And we broke to the downside. And so once we create that new low, we don't have anything near term that supports any other rejection points to the downside. So the idea here is, could we just free fall, or do we have some support that could potentially give us confirmation on a reversal? And I put a blue line there, but this is where we have to go into time frame continuity. So we got to push our time frames out a little bit and find where the last level of support or resistance was at when we were down at this particular level before. So what you see is when we push out time frame continuity, we haven't been at this level since 2020, 2021. So the high probability of us bouncing back to the upside, at least to go retest some recent highs before we eventually come back down, if that is the trend that's going to happen, is high probability. So we got to be thinking rejection, and we got to be thinking, you know what, take my money and run. I rode the momentum to the downside. It's time to start looking for the reversal to the upside and make some money going both ways. Now, going back to our chart, I went ahead and switched into the 4-hour chart. Remember, time frame continuity, we need to have multiple charts that we're looking at so that we can get the different elements of the trading style that we're trying to use. Right now we're going off rejection. So we already had our price action, we already had our rejection, right? We got time frame continuity. Now we're looking for follow through. So we reversed off of hitting a new low. We were expecting that one. So now let's look for the follow through and see how we can ride this wave. Broke through our previous level of support and resistance, and so we're good for follow through. Now, continuation to the upside, high probability, but where do we start to look for the potential reversal where we need to kind of exit? And right here, boom, we start to get that weak candlestick right there, and it's also being supported at previous levels that we've had rejection from the downside. And so we should start thinking right there, boom, okay, if we get a little bit more push to the upside, which you can see that we did on the next candlestick, we should be thinking reversal, and we need to be watching for our exit. And boom. So we peaked up a little bit. We went ahead and exited out of trade. Now it's time to ride this back down to see if we retest those previous lower levels and we get some follow through to the downside. As you can see, we pushed all the way down to the downside, but we couldn't break that trend, right? So this should be an indicator right here that we weren't able to break the previous level. Price action is being supported, so we probably should exit out of any short position, because the likelihood of us continuing follow through from a bounce off of this line to the upside is high probability. So if we're short because we played off the rejection, we need to start going long, and we need to take our money and run and start going long on the next trade, or start watching the price action and see if there's a long potential for us to get in. This brings us to our last part of this particular training, and we're going to talk about breakout trading. So the keys to this: pattern recognition. We need to see support and resistance breaks, and then we want follow through into the next levels. All right, so we already had the breakout level from the lower period here. Now, while we walk through this, I want you guys to pay attention to the area of breakout levels, okay? A lot of times when the patterns, they tend to repeat themselves, and when you get the breakout levels are going to be in about the same levels, basically. And we're looking at prices, okay? So level 1, level 2, and then the next breakout pushing up before we find the bottom of the breakout will break out to about the same as the current breakout. So let's see if we're right on this one. And so we look at our next level, and we're not quite at the breakout level yet, right? So we're looking for dramatic push that pushes us to the upside, okay? That's where we want to break. So this is an expected break to the upside. And then when we look at it, we're actually at about the same amount that we were on the previous one. And this is going just based off of just price action, support and resistance, and looking for the push inside of the ranges. Next level up, and guys, look, the patterns are trying to repeat themselves. Now, I always go off the thing for patterns of 3, right? So we see 3 levels here. We should be expecting a potential either complete dump of one way or the other, okay? So I like to go off of 3. A lot of times stock charts, they go off of patterns in 3s, and so when you see 3, you know the head and shoulders, you know the triple bottom, the triple tops, so on and so forth. You need to be looking for a potential dramatic push either one way or the other way. Now, we're either going to push to the upside and find new level, or we're going to push back to the downside, because each of these step here, the red, the purple, the orange, each of these are steps. So if we fail to meet and exceed the top portion of it, the high probability of us coming back to retest the bottom portion is absolutely high. And so we need to understand that. And that is part of the price action in this overall breakout strategy. And boom, look at that. That was our dramatic push to the upside. And when you have the dramatic breakout that we're looking, it broke out of its step laddering patterns. This is where you need to start really capitalizing on an upward momentum pressure, and you should be looking for the eventual fail at the top and the continuation to the downside to retest. Now, something to note real quick. Look at the level from the breakout. Again, where we started getting that kind of that intra-level support and resistance line is in line with our previous pattern strategy, right? But I want you to note where we see a pattern coming through so we can issue the follow through after breaking out of each of the patterns. And if you look at it, it holds up throughout this entire chart that we're looking at. Remember, we were talking about the patterns of 3s, right? Well, look at this. 3 rejection points, 1, 2, 3, before our true breakout. And again, it just goes into pattern recognition. It also comes into skill, experience, and things like this to capture these type of movements. And this is what made us so successful over this past 30 days from taking 10K into 38K was pattern recognition, follow through, time frame continuity, and going off of momentum, breakouts, and playing off the rejection. Now, you're probably thinking, okay, this is great for SPX, but that's too rich for my blood. Well, I say there's no issue, okay? What you need to look for is high volume, high market cap, and you want to go at the money, in the money with your trades as much as possible. So let's look at a couple of the ones that we did over this 30 days and see how the charts compare to the SPX. Remember, here's our SPX on the 30 days. Here's Apple. It's not a perfect chart, but very similar to the SPX. So Apple would have been a great trade to follow the same principles that we utilize on the SPX. Tesla, another one that followed our particular SPX breakdown. Very similar, very close charts, and the similar price action movements. And Microsoft followed the same type of pattern, the dump early on, the rejection, follow through to a peak, and then the dump finishing off the week. All right, team, that's it, and I hope you learned something. These are very powerful tools that we utilize. The momentum, breakouts, and rejection can be your best friend and can give you great indications of where the price action is going and how to trade with the most probability of success. And as always, if you want to join a winning team and come trade with me, guys, sign up and I'll see you on our trading floors. When that bell rings, we'll go out and make some money like some of these trades we just absolutely destroyed last week.
Beats nice in the traders war room. What you want to do in the traders war room? What you want to do? This the traders war room. Traders war room. This the traders war room. What you want to do? Hey, locked and loaded.